Stock investing for beginners. For the month of November, I made over 6,600 in 1 month. Some people ask me how much I invest to get this amount. At the end of the video, I'm going to show you my trades and how much I invested to get this amount, and also my strategies to profit every month consistently. In this video, I'm going to talk about 5 reasons why stock market could go down in December and another 5 reasons why stock market could go up in December. We're going to look at some data and also analyze December stock market and make some forecasts. On December 4 and December 5th, stock market went down. Remember, like I said before, November was a very bullish month, so it's very normal for the stocks to a little bit pull back in December. But I believe that any pullbacks gonna be good deep buy opportunity because it's a big election year and also we are in a bull market. Let's look at the past 5 days. Stock market dropped from December 1st to December 4th and it just fluctuated a little bit, and even so S&P 500 is up 19.43% year to date. So it means if you invested $1,000 at the beginning of the year, your 1,000 will have become 1,200. So 200 is the extra money you got from investing in stock markets. It's much better than putting your money in the banks. The interest rate is about 5%. That's the most you can get. And plus, the banks use your money to make profits of your money. They may give you 5%, but they charge borrowers about 20%. So the difference is their profits. You can make that profits into your pocket if you know how to invest yourself. What can you do? You can do stock investing, put option, call option, then advance option. If you know these 4 strategies, that's gonna change your life. Nasdaq, the past 5 days, it was down 0.95% and it was down on December 4th, but it went back up a little bit on December 5th. There was pullback in the technology stocks. In the middle of the video, I'm going to tell you which sectors investors are rotating money from and which sector they are putting their money in. If we know that, we can profit from sector rotations. Dow Jones, it was down 0.11% on December 4th. The past 5 days, it was up 2.17%. So there was rotation from Nasdaq to Dow Jones. If you look at it, year to date, it's up 9.26%. Still, Nasdaq outperformed S&P 500 and Dow Jones 37% year to date. The past 5 years is up 104%, so double your money over the past 5 years. S&P 500 73.45%, is almost double your money. And Dow Jones is not so much, only 48.45%. So that's why I prefer to invest in technologies and S&P 500 stocks compared to Dow Jones industry average. The stock market could go down in December. This is reason number 5. Jerome Powell said Federal Reserve may lift interest rate again amid inflation. So if we see more inflation coming in, then he may raise the interest rate again. But the stock market didn't care. Everybody thought he's just saying nonsense and he may just start dropping the interest rate. So that's why stock market didn't crash over the past 1 month. And it just kept going up. But remember, Jerome Powell may surprise you again. He said that Fed rate cut speculation is premature and rate hikes still possible. Remember, he just kept repeating the same sentences, the same statements. There's a chance that he's going to raise the interest rate again if inflation pick up. So that's the reason number 5. So the stock market may be surprised if he becomes more hawkish and raise the interest rate again. Reason number 4, stock markets could crash in December is because inflation may rise again. But this reason number 4 is less probable than reason number 2 that I'm going to talk about. Remember, inflation has been ticking down every single month. But if we have just 1 month of surprise inflation pickup, that could crash the stock market temporarily. But I think that's gonna be a good deep buy opportunities that I have been waiting for. Reason number 3, war. Remember, we still have Ukraine-Russia war and also Israel-Hamas war. If we have only 3 or 4 countries war happening, that's normal. But if we have more participants coming into the war, maybe 5, 6, 7 countries, that could be World War III. If that happens, that's another shock to the stock markets. Stock market could crash temporarily, depending on how long the war could take. During Civil War and World War II, stock market went up. So I would not be surprised if stock markets perform well in World War III, depending on how serious it gets. If there is a nuclear war, of course, stock market could crash, everything could crash. Let's look at reason number 2, which I think is more probable. Bank failures. Remember, banks are holding treasuries. When interest rate goes up, treasury goes down. When interest rates go up, the bond prices crash. So lots of banks are holding bond prices at a loss. So in that situation, if there is a bank run, let's say people are afraid that they're gonna lose their deposit, they're gonna withdraw the money from their banks and they're gonna put it in somewhere. So if that happens, the banks may need to sell the bonds that they hold to fulfill their deposit requirements, to pay the money to the depositors. And plus, if there is a liquidity crunch in the banking system, they need to sell bonds at a loss to fulfill liquidity. If that happens, there could be a systemic banking failures. That's more probable than the other reasons that I talk about. If that happens, stock market could crash for a longer term. Reason number 1, expected. Something unexpected happens. That's something that we could not predict. Like in 2020, there was a pandemic. Nobody expected it. It was once in 100-year event. And something like that could happen again. If that happens, stock market could crash in a flash. But when that happens, don't sell your stock. Once stock market crashes so fast, there is nothing you can do. And plus, it could bounce back really quickly because oversold situation. If the stock market crash in a flash, I would just be buying more because that's a good opportunity. In life, in any situation, any unexpected thing happen. Just like me, I became top 40 realtor in the 40s. I worked so hard, but I never expected that to be happen, to be featured in the top magazine for real estate agents. I was one of the new real estate agents that became a top producers in the country. So always expect unexpected. Nobody knows. Something good and unexpected could happen. Be positive. Keep investing. Now let's look at why stock market could be up in December. Reason number 5. S&P 500 performance after low 3 consecutive months in August, September and October. 100% of the time, November, it was up. So we look at 5 years, all the months were up in November. And December, only 1 month was down in December. So 80% of the chance that we might see stock market going up in December. But for the final 2 months of the year, there is an 80% chance that we're gonna see positive months ending the year. Reason number 4, stock market could be going up in December is because of core PCE inflation rate. It only rose 0.2% in October compared to 3.5% from a year ago. That's what Federal Reserve look at mainly because it excludes food and energy prices. Food and energy prices are beyond their control, so they tend not to look at it. If something happens in OPEC cut productions to raise the oil prices, they don't want to look at it. If a war breaks out in one region and food prices going up, they don't want to look at it because it's beyond their control. They only look at what they can control. So it's really important. It has been going down. Of course, they really like it. Federal Reserve really like it. So that's why they pause the interest rate, and they also signal that they might be cutting rates in 2024. Even though Jerome Powell trying to downplay the chance of rate cuts, but I think it might happen in 2024. It might not be in the beginning of the year. It might be later part of the year. So what is reason number 3? US GDP grew at a 5.2% rate in the third quarter. Remember, lots of investors, they were afraid that because of rising interest rate and rising inflation, it's gonna crash the economy. And Federal Reserve raised the interest rate, and now we have inflation coming down. Plus, economy is still growing. It's much better than expected. It's like Goldilocks situation. You can have the cake and eat it too. Remember, so that's why stock market have been really bullish for the past month, especially in November. And reason number 2 is really important. Warlord. Warlord is one of the most hawkish Federal Reserve presidents. Even he signaled that we could possibly cut the rate in 2024. So that's why stock markets were really happy, and Federal Reserve policy makers look increasingly comfortable to close out the year with US interest rate on hold, pause the interest rate, and the clock ticking on how soon to deliver a first rate cut as they try to engineer a soft landing for the economy. Remember, Federal Reserve presidents and chairman, they don't want to crash the economy. They want the inflation to go down. So they want economy to grow really good, and also maintain inflation going down. That's very important. That's going to be really great scenario for their policies. So they would probably be very proud of their achievement if they could pull that off. If decline in inflation continues for several more months, 3 months, 4 months, or 5 months, we could start lowering policy rate just because inflation is lower. Remember, 5 months, December, January, February, March, April. So we are looking at earliest in May that they could start cutting the interest rate because they don't want to break the system. Lots of the banks, they are still holding bonds, treasury bonds. Their bond prices are at a loss right now. So they don't want something to break, and they might be cutting rate. It has nothing to do with trying to save the economy. That's what they say. It's consistent with every policy rule. There is no reason to say we will keep it really high. Of course, it's a policy rule because their policy is to keep the inflation down and keep the employment rate as high as possible. In order to keep the employment rate really high, they need great economy. Without great economies, there's no reason for employment rate to be really high. And the last reason is really important for investors like you. It's high net worth investors hold record cash, and investors still leaving a lot of money on sidelines during market run. This video was in June. This video was in July. So there are lots of trillions of money on the sidelines. They don't want to invest in the stock market yet because they want to wait clear skies before they start putting their money in. Why? Because it's really hard for billions of dollars to pull out of the market without crashing the stock markets. They don't want to incur losses, so they want to wait and see to make sure that the sky is clear, there's no rainy day before they start putting in the money. So let's look at the latest data if that stays true. Total money market fund assets increased by 72.9 billion to 5.84 trillion for the 8-day period ended Wednesday, November 29. So it's very recent. If we look at the data on November 15, the total retail institution 5.7 trillion, in the money market funds like treasuries and CD, certificate of deposits. And it increased from 5.7 trillion to 5.8 trillion. Not only institutions 3.5 trillion to 3.59 trillion, but also retail investor, they prefer to keep cash in the money market funds 2.23 trillion to 2.245. So in total it jumped to 5.8 trillion. Can you imagine if just half of it goes into stock markets? How would that change the stock markets? That's why if you are watching my videos, my channels, the best time to invest in stock markets was in 2022 in October, the start of the bull market. The best time for this year 2023 was in October, but second best time will be in December. Remember, after December, at the beginning of next year, lots of people's gonna start making New Year resolution, so they don't want to miss out on the stock market return, so they're gonna put so much money at the beginning of the year. It's called January effect. So before that happens, any dip in December is an opportunity for me and for you, for us. Together we can invest before everybody else. Right now, setup rotation is happening from technology stocks to healthcare and consumer stable stocks. So it's no surprise that technology stock went down for the past week, but there's an opportunity. I believe that Alphabet, Google, and Amazon, they are still undervalued. They could go up much higher. So I'm buying the dips in Alphabet and Amazon. And healthcare and consumer stable stocks, I invested quite a lot for the past few months. I might be putting more money in healthcare and consumer stable stocks, because if there's any sign of recession in the next year, 2024 or 2025, consumer stable stock gonna skyrocket, and also healthcare stock gonna skyrocket because they want to put money in the defensive stocks. So what can you do if the stock market crash? And what can you do if stock market get more bullish in December? If stock market go down like in October like this, we can use put options or call credit spread, or we can just simply dip buy any stocks that we want. If we see bullishness in December, then we can use call options, or we can use advanced option. We can use advanced option for any scenario. If the stock market goes down, we can use it. If it goes up, we can use it elsewhere. That's how I made money in October. I made over 5,000 even though stock market was going down. I used advanced option. I only lost 4 trades. Then the rest of the trades I made profits. Basically, I sold put options and I sold call options to utilize stock market downturn. In November, I made over 6,600, and the same strategies I used advanced option to profit. Of course, I had more losing trades in November, but these are the trades that I was willing to lose. Advanced option, you hedge against different position. Stock market going down, you are okay because you hedge the position. Stock market going up is also great. That's why I prefer to use advanced option. So these losses are the losses that I was really willing to lose. Most of my trades are winning positions, so that's how I made over 6,000 in November. And how much money did I invest to make so much money? I'm going to show you an example. For Celsius, it only cost me $400 to make over $800. So the profits will be 438. So more than double my investment, my principal. Of course, by investing in stocks, I need much more capital to make similar return or profits. For example, for Visa, I bought 100 shares. The cost was 23,100. So when I sold it, it was 24,000. So the profits were 949. So I had to use a lot more capital to make just 900. For advanced options, for Metas, I only used 550 and I made 488.97, almost double the cost that I use. But remember, you have to know how to invest in great companies to profit from advanced options. If you don't know stock investing, if you are not really good at stock investing, it may be difficult for you to profit from advanced options. So stock investing is really necessary and very important. So when I started making from stock investing, I used all the profits to buy a house, then to rent it out, and I kept making more profits in stock investing. Then I learned about advanced options. I created some of the advanced option techniques. That's how I've been profiting consistently. If you want to learn more about advanced options, you can go to my YouTube playlist, click on advanced option trading. If you have any questions, comment down below. If you are just starting out, want to open a stock brokerage account, the link is gonna be down below. Share, subscribe. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now.